What is up, good people? Jungle Inc. here. Hope you're having a great day. We're going to watch an interview together. Everyone's favorite reptilian, former SEC Chairman Jay Clayton. Somehow this guy became the crypto ambassador. Go figure that. How does that even happen? But they're talking Bitcoin ETFs. And I see a lot of people, I think, overreacting. That, you know what? The ARC ETF application got delayed, and therefore it's more of the same. This is never going to happen. Look, we're knocking on the door. We are going to get first a Bitcoin ETF, and it's going to roll out to other assets within cryptocurrencies. It's happening. BlackRock, Fidelity, many more are coming that are going to be offering these products. It is not a question of if, just when. And it's expected they're going to delay this. I've been saying it forever. You're not going to get these things approved right away. Believe it or not, this is a complicated issue. It's going to take some time. I personally expect they will take it to the very bitter end and approve this thing in January, but it may happen sooner. Only time will tell. And even if this round doesn't succeed for some reason, we are darn close. We are going to get crypto ETFs. It's just a matter of time. There's a whole lot more in this interview, so let's go ahead and go through it, and we'll discuss.
The SEC has postponed its decision on the ARC Bitcoin ETF, marking another setback in the prolonged effort to allow direct trading of crypto assets on traditional U.S. markets. Joining us now is Jay Clayton, former chair of the SEC and a CNBC contributor. You know, I was trying to, been on vacation, so I'm like a little woozy, but I'm trying to remember the last.
And what's funny, if you compare this interview with Jay Clayton when he was chairman of the SEC, it's so different. You know, he was anti-crypto, wouldn't comment on anything. And now, you know, he's all about the future of this technology and how it will be used. Man, do their tunes change quickly when they get out of the SEC and start working in the private sector, and they want to make more money offering these products because there's a huge demand there. That's just why we're going to see this happen, because there's a big demand from institutions and high net worth investors. They want in. They're not going to keep crypto on a Ledger Nano stuffed under their pillow. They want a custodian. They need a custodian. And this is going to be the product that many of them use. Bitcoin ETF.
Politicians we had on, and they had all kinds of plans to pass all kinds of stuff. And there was one from the one party, one from the other party. They were together. They were writing stuff. Anything going on? Anything happen? This isn't going to happen again. It's just more of the same, Jay.
Well, look. The SEC postponed the decision, but they are seeking public comment. And the landscape for Bitcoin and retail access to Bitcoin has definitely changed. And let's just look at where we are today. When I was SEC chair, was very skeptical of the Bitcoin trading markets. And whether you believe Bitcoin is going to go to whatever or dry up and go away, I think that's no longer the question. You know, you had Russ Benham on. He was talking about it's clearly a commodity. It should be regulated like a commodity. We have large retail participation around the globe, and people want access to it. Now,
and that's the biggest point. It's not the SEC's job. And I see a lot of these former regulators on Twitter saying it's a Ponzi scheme. There's no real value there. First of all, it's not a Ponzi scheme, but they're not there to decide, is this a good investment? Is this a worthwhile investment? Just, is it legal? Is it properly regulated and monitored? And again, the big change here we saw with BlackRock and many of the other ones that followed was this monitoring agreement, where you have an agreement with Coinbase, where you get the underlying data, and you can be assured there's not as much manipulation, things of this nature. So I think that's what's going to push us, you know, over the finish line here, what's going to get it done. But it's not Gary Gensler, Jay Clayton, or any other regulator's job to define what is a good investment. You know, does this company, does it have, you know, a bright future, or this asset, whether it's Bitcoin or gold, like, is this going to be a good investment? That's not what they're supposed to be involved in. They're supposed to be regulating this space so we, the investors, can ultimately make that decision. And it's time. Look, the market has spoken. This continues to grow and be adopted, and it is time to start rolling out these products as far as ETFs, spot ETFs.
What do we have? We have very credible financial institutions who have fiduciary duties of best interest to their customers, who are saying, we want to deliver this product, and we can do so consistent with those obligations. Last thing you have is you actually have the futures ETF trading, which we all know is an inefficient product. So my assessment looking at all of that is let's get some public comment and then let's move on and have a spot Bitcoin ETF.
So is it a stretch to say, okay, there are securities like equities, and then there were places like First Jersey or Stratton Oakmont, or take your pick of these fly-by-night bucket shop operations, and that's akin to SBF and maybe
look, the crypto markets,
FTX.
the crypto markets, okay, were rife with fraud.
But not crypto itself.
Crypto's a technology. Okay, it is a technology.
People still conflate the two and argue that crypto itself is a Ponzi scheme.
Right, but clearly distributed ledger technology is a technology that people have found efficiency in. Go back to the legislative efforts. We've talked about stablecoin before. There is little doubt that stablecoin is a very efficient way to transfer dollars around the globe. Can it be done in compliance with our AML, KYC, and other, what I would say is macroprudential and national security laws? Yes, it can be. It can be done. We're talking about a digital dollar. So
the big difference here, the excitement with Jay Clayton about the future of crypto, how this technology will ultimately be used. When he was chairman, people forget he wasn't really anti-crypto. Yes, he launched that Ripple lawsuit on his last day. But outside of that, Hester Pierce has talked about this. They just didn't meet a lot. They didn't discuss cryptocurrency much. It just wasn't important. But now he's got a job. He's earning big bucks. And he's earning big bucks to figure out how to get these products out to the customers of his firm so they can retain that business, so they can bring in more capital. And now he's excited about the future here. It's such a racket the way our system works. Like this moron could have got a lot of this done when he was chairman, but it just wasn't piquing his interest. He was worried about, how to give China sweetheart deals and all the nonsense that this guy works on. And now he's incentivized monetarily to be pro-crypto. And what do you know? All of a sudden he sees the light here. I wouldn't be surprised when Gary Gensler leaves if he doesn't jump into crypto and use his quote-unquote experience to help some firm out there roll out their products. It's just the whole racket we're in here. And really what the deal is, it's not so much that Gary Gensler himself is anti-crypto. He's just getting his marching orders from an administration that is fairly anti-crypto, whether we're talking about President Biden, Elizabeth Warren, Maxine Waters, like a lot of the heavy hitters within the Democrat Party, at least that old guard there, they're very anti-crypto. Now, it's not going to matter. This is going to happen. BlackRock, Fidelity, Charles Schwab, you name it, the big players out there, Goldman Sachs, JP Morgan, even though they don't talk about it a lot, they want this. They need this, and they are sick of seeing the money fly out the door and go be parked on Coinbase and other places like that. They want in to get paid to manage your cryptocurrencies.
is the technology a good technology for some uses? Pretty clearly, yes.
Well, then, what's the problem then? Or you don't think it's going to be a problem? What's long? Do you think Gary Gensler believes that what you just said?
Well, we did, in this administration, approve a futures ETF for Bitcoin. So, if that's already there.
But if that's inefficient and actually part of the problem, then why the dragging of the feet on the spot?
Well, yeah. Look, anything like this, where you've had a history of really bad behavior, you do want to move slowly, and you can see that in Congress. And look, we live in a very political. I would say what percentage of this program actually touches on politics? A fair amount. Like, what is the political response to various things going to be? Yeah. When you have a fraudster like Sam Bankman-Fried, who was deeply intertwined in politics, people will want to take a pause.
Right. So when we decide to try and sing a song together, the only one we can sing is probably the Star Spangled Banner, because she's so, from such a different generation.
What is he babbling on about? First of all, I just want to talk about Jay Clayton, man. The guy looks like a sickly vampire, like he hasn't fed in a couple weeks or something like that. And then you got this babbling buffoon here. What's interesting about the next part of this interview is they're going to talk about classifying, various cryptocurrencies. Should it be a security or not? And I think we just got our answer in that Ripple court case. Most of our cryptocurrencies trading out here, well, they're not going to be treated the tokens themselves as securities. It means the SEC probably doesn't have any authority to crack into those secondary markets. So these are some of the things they're going to grapple over. And they have to beg and plead for additional authorities to regulate this space. But right now, it's just not a good environment to get that. You have a Republican Congress, Democrat Senate, Democrat president. And even before then, they weren't getting anything passed. Here we are over 3 years into this administration, or right around 3 years. And we still don't have a Biden tax plan. We're still rolling with Trump tax because they can't get anything done at this point in time. So do they get new authorities or not? Probably not anytime soon. So they're going to have to figure out how to work with this market. And part of that's going to be they're going to probably have to give you a spot Bitcoin ETF because they're going to lose to Grayscale in court. Like, they can't drag their heels anymore. How do you get Grayscale back for suing you, for beating you in court, for embarrassing you? Well, you're going to give someone else that Bitcoin application first, and then maybe you'll give it to Grayscale. Probably too late by then because they will capture such a lion's share of the market. You'll probably see Fidelity, BlackRock, one of these types of entities just acquire Grayscale in totality.
Should she be? She's got plenty of time. She's young. Should she be thinking about buying 4% bonds, or would you recommend she buy some Bitcoin, Jay? I mean, what would you tell Kelly Evans to do at this point?
What would I tell Kelly Evans? Diversify. That's what I would say. Diversify.
I'm kidding when I say don't buy a 2-year note, buy Bitcoin. Sort of kidding. I'm sort of kidding, but as you know.
Let's be clear. Bitcoin should not be a dominant portion of any investor's portfolio, okay?
Most of your big money is going to think like this. And you know what? When you look at big investors, if they put 1-2% in cryptocurrencies, that's a whole heck of a lot more than some crypto bro, YOLOing their life savings into this asset class. Like, in totality, that's an avalanche of money that's going to come flooding in. So again, a lot of these investors, they're not going to put a huge chunk of their portfolio into crypto, but it doesn't take much. Talking about the type of numbers we're discussing here, probably, your average person might put 1 or 2%. We may see more aggressive people put a higher percentage. But again, we're talking about much bigger numbers here. And, that's why this product is so important to get across that finish line. Plus, it just legitimizes this whole space, this asset class.
I guess can I just rewind for a second? So I like what you said, how Bitcoin is a technology, right? And there are let's separate that from the asset class. Has the SEC made a giant muddle, though, of this asset class? And how do we unmuddle it, right? If you could just start from now. I mean, what's okay, what's not okay? And I like what you said about, at this point, okay, then just have the spot Bitcoin ETF, because what are we doing here? But so many of the players, and in the way that Coinbase, I mean, how do you feel about Coinbase's whole approach, where they're basically like, no, we're just going to come, you want to slap us with a Wells notice? We're just going to come out swinging.
Okay.
First of all, these people are giving their little speech to give. What do you want Coinbase to do? Coinbase asks, what's the laws? How do we discern what you think, at least, a crypto security is or is not? They have publicized their methodology for going down through assets and picking which ones to list. And they're not giving any guidance. They're not giving any clear, reason or logic why particular assets may be security offerings. So to paint the crypto industry with this broad brush and say, well, everyone is a criminal and they're just disregarding the law. Like, I would ask her, what is the law? And you know what? Ask your little crony over here, Jay Clayton, you explain to us then. How do we decide if something's a security or not? And the courts, they did it pretty simply, didn't they? They said things like XRP, things like Ethereum, things like Bitcoin. Those aren't securities. And when traded on the secondary market, well, you're free and clear. This is just the trade of a commodity on the open market, no matter who is trading. That is the clearest guidance we've got. So, lady, what is your problem with Coinbase? And tell me how you would do better. Would you only list Bitcoin when that really should not be a way to look at this asset class? That's not a legal way to look at running your business. Like, they're doing the best they can, and give us those guidelines if you think it should be done otherwise. That's just kind of a ridiculous attack on Coinbase, and I'm sure she's been given that little speech to throw out here to Jay Clayton.
I mean, there's so many extraordinary things happening in this space.
Well, let's go with where it started and has the SEC made a mull of it. We had people take this technology and try to evade our time-tested securities laws.
Absolutely.
And our time-tested securities laws are incredibly rigorous, incredibly burdensome. To make a public offering in the United States, you have to go through many hurdles, much disclosure, you have to have audited financial statements. They wanted to evade all of that, okay? The SEC did a good job putting a stop to that.
ICOs, you cracked down on that.
ICOs, cracked down. Okay, and now the question is, there are things out there that are not securities. Bitcoin is one of them. Others, we talk about tickets. We talk about things that can trade in a market. We have to catch up on how we treat those in terms of secondary.
Look like? So that's why the Ripple ruling was so interesting.
Yeah.
You know, so what's going to be a commodity? What's going to be a security? Who's going to? Do you still feel like we have the right tools and are approaching this the right way? And
raising capital for a future product is a security. It's that simple, right? You come to me and you say, "Hey Jay, give me money. I'm going to go off and build a network. I'm going to go off."
He makes it sound so simple. Hey, if you're raising money, therefore you're offering a security. But obviously the SEC doesn't know how to apply this, because let's really look at this clearly. They went after one big player, Ripple, and they just got throttled. Now, yes, they'll get some fines and penalties, but the truth is, when you look at that ruling on the case, it makes sense now. When we look at, well, Ripple's okay to sell in the secondary market, but when they sell directly to people and they have contracts, that's packaging the asset. Like, that makes sense. But if you would have asked Jay Clayton and he would have actually answered the question, which he wouldn't, or you asked anyone else at the SEC or any attorney out there, like, none of them would have told you that was going to happen. Not a single person, was able to say exactly how this would play out. Looking back, very sensible. Looking forward, no one knew how that was going to play out. So to try to frame this as, well, it's so simple, it's not. It's far from it. And part of that is just because, we don't have regulators that will discuss this in a meaningful way and help us work through this. I think they could have arrived long before at this idea of, if you package XRP with contracts and agreements, that's a security offering. And especially with that directness of where they're giving Ripple money, and they probably think you're going to build a better network and things like that. Like, you could get to that same, place that the judge did, but you didn't try. And so this is not a simple issue. No one knew what the heck was going to happen. And now we have some guidelines that we can work from in a compliant manner. And that's a great starting point. But I just hate how he always tries to frame this as such a simple issue when it is far from it.
Go off and build a production. I'm going to go off and do these things. And you're going to get a return as a result. That's pretty clearly a security. But something that is for use today, time on a server, going to a play, that Bitcoin, now that it's completely decentralized, that is not a security. The lines, I think the lines are actually pretty clear.
So Coinbase is going to get in trouble.
So something like Cardano, what's the problem? I can use that to trade on a decentralized exchange, send a payment. Something like Filecoin, like he says, server space. What about storage? I could use it to pay for storage. Like, his examples totally contradict the things that the SEC does. He's just being disingenuous. And I'm not sure if it's these reporters don't know enough to kind of hit back at that, or they just don't care. And much like him, they're just trying to send out government propaganda.
Well, not because they had Bitcoin, but because they had all of the other stuff.
Well, and one thing that is, I know this is, it's very tedious.
Technical, yeah,
it's very
I know,
technical.
I know.
But there's a big difference when people talk about crypto between raising capital, you coming to me and saying, give me money, and providing trading services. We treat the secondary trading of securities, commodities, and other things differently from a regulatory perspective than we do the initial distribution. The rigorous protections around initial distribution are what we focus on, but trading has a different set of rules.
So anyway, that's it from our buddy Jay Clayton. I think the big takeaway here is we still have some work to do for classifying these assets. Very important, so people know with certainty when we are selling XRP, when is it a security, when it's not, Ethereum, all the big major cryptocurrencies out there. But the big thing I would take away from this, Bitcoin ETFs are happening, everyone's down, and I get it. We've been struggling for years saying, any moment it's coming. But you're going to start with Bitcoin, it's going to roll off to Ethereum, and then the broader crypto market, especially your big prime time cryptocurrencies out there that have staying power, large market caps. People are going to want in there. There's going to be a lot of demand. Again, I think we're going to get Bitcoin first, and that will kind of, I think, take most of the demand for a good amount of time. But at some point, everyone's going to roll off onto the altcoins. Just like the reason we invest in the altcoins, it's going to give you likely superior gains, just because you're coming from a much lower market cap and not the biggest in crypto. And in general, this whole space is fairly shallow, very early days, and you have great growth potential that's unrivaled by anything else, even from Bitcoin, which is the biggest asset in this class, and it's nowhere near like topped out as high as it can go. You'll probably still beat stocks, real estate, most other investments you can make just with the easiest layup there is in Bitcoin. People, of course, are going to want that now, but they're going to roll off as they start wading through this stuff. And part of that's going to be having clarity, knowing when I buy something, well, the government's not going to come and say that's illegal, a month later or something like that. So let me know what you think down below. Are we going to get a Bitcoin ETF? Is this our time, or are we stuck in this nonsense battle even longer? Myself, I think it's going to happen in January or sooner. We'll have to see. As always, please like, please subscribe. The revolution will be televised right here on Jungle Link.